call because I'm recording this right now. It's now being recorded. Okay, so what I trade off is price action, right? Go ahead, Tim.
I was just saying, yay, it's recorded.
Right. What I trade off mainly is price action, right? And so a good line in one of the books that I read said that if you pay attention to all the little details of every candle, it tells you a much bigger story than you think that it is, right? And so a lot of the stuff that I'm talking about may come off as a little bit more advanced, but it's not, because I guarantee some of the things in the Bible, the trading Bible, and that trading handbook, or whatever it's called now, that you all get as a member in your email or in the training section. One of the things that I know it talks about is candlestick patterns, right? And candlestick, what a particular candlestick pattern means, right? And not even a pattern, but just an individual candle shape, right? And so I pay a lot more attention to those what the individual candle was telling us than some traders do. And so the reason I want to go over this chart in particular is because it really gives us clean, exact examples of the stuff that I'm talking about and the little hints that you can get from what the story is telling, right? So we start with these two candles of the day, the first two trend bars. I also call candles bars. You'll hear that a lot. These first two trend bars, right? These are big, strong green trend bars, which, given no other context of this chart, we would assume that those candles are telling us the stock is going to continue up, right?
It's not going to continue up is the fact that that second candle did not exceed the volume of the first candle.
Another great point. Exactly, right? And that is another key, like a little one of those. There's all these different clues. It's a puzzle essentially, or a little story that you're trying to put together. That's a perfect example of a clue to the puzzle, right? If this would have been a true breakout, we would have seen stronger volume on that second bar, right? On that second trend bar, right?
Candle.
Say that again.
Yep.
You cut out.
It probably would have exceeded the previous candle.
Right.
But the fact that
exactly.
it didn't volume is a clue that it's coming into resistance. It's gonna have a hard time
breaking over there. Right. Exactly. And that's where we saw it come into, right? So we had an hourly level there, but that's also where yesterday's close was. And so you know that there's going to be a reaction there, right? There's going to be some sort of price reaction there because price closed there. That's where a gap is being filled. And so there's going to be some sort of reaction there, right? So then for me, I knew that I wanted to short bid you despite these two trend bars. So now I have to start looking for, okay, based on my system, what is the candlestick that is going to trigger a potential entry for me, right? And it's that third candle of the day where we start to get some sort of clue from the price action that this move is going to fade, right? And what that third candle does is it's very subtle, but it tests higher and closes lower, right? Now, if this part up here, let me zoom in. If this wick up here doesn't happen, I put much less weight into what this candlestick that I'm looking for, right? The test higher there is key because what that tells us is that bulls attempted to push the price higher, they attempted to break out. And usually what it also means is that there are people who have orders sitting waiting above the high of this candle. When they test higher and that fails, all of the people who had orders above that didn't wait for a 5-minute close above are trapped and they have to immediately exit their positions. And what that does is start to trigger, right, a little bit more of a cascading event, right? Everybody who wasn't patient, which is fine, right? If you're taking a long on a break above a previous candle, you're not always supposed to wait for the close. So it's okay that people had orders and tried to take that, but this is the price they pay, right?
They should have had also an extra condition, take the order if it closes above, but they needed an and volume exceeded previous candle. If you had that, it would have been, you wouldn't have got caught.
Exactly, right? And there's other little subtleties that longs didn't think about here, right? So this third red bar of the day is the first really big clue that told us something, right? Now, then we start getting, bad view. Then we start getting a little even more into it with this fourth candle of the day, bar 4. I'm going to get my text tool out so I can title these. Bar 4 of the day, right? What does bar 4 tell us at all, right? Because again, we're trying to think of the puzzle or the story that's like, what does this tell us, right? And the answer is not really anything, because while it looks nice on the surface as a green bar, and if it were to have gotten a little bit more continuation, it would have been a good long setup, right? If anytime a red candle like this, a sell setup is what that's called. Anytime a sell setup like that, if it were to fail, meaning we get back above that high, that automatically becomes a potential long, right? So there is a setup for this to work out where we can find a long over this little failure right here, but it doesn't follow through, right? All it does is it stays inside the range of the previous bar. And the previous bar was a big red, what's called a red bear trend bar, right? It was a big red candle that tested higher and failed. So an inside bar, what the premise of what they do is they're really just continuation candles most of the time, right? Most of the time they continue the previous candle's strength, and whether it be strength or weakness, right? And so what this inside bar, this fourth bar of the day, what it did for us was tell us that, okay, bulls are holding, they're fighting back, right? They're giving this a little bit of strength. Longs aren't giving up easily. We're not immediately or reversing and fading the move. But by closing where it does and how it does, it also tells us that, hey, if you're long, you should bail. And if you're not long yet, or if you're not long, don't get long until we get some more confirmation. That is what this inside bar is telling us, is that wait for some sort of confirmation, which in this case, in my eyes, would be clearing this sell bar is what I'm going to call it, right? This red 5 minute, we'll call it, or well, it is bar 3, but clearing the bar 3 high would be confirmation, right? Because that means the longs who were trapped are no longer trapped. They're able to get out, right? We have buyers that are able to push us over the peak of the sellers, right? So when you think about what it all means logically and how it would work, it all kind of makes sense, right? It's everything that we were all taught about candles in the very beginning when we first started to trade. But at least for me, I learned all of this stuff within like my first couple months of trading, but then I never really cared about it or used it or anything like that, even though it's right there, right? It's telling us this candle, by testing higher and then closing lower, is giving us a potential reaction to play off of, right? So then we have bar 4 that ends up being an inside bar, and then we have bar 5, which is the first signal bar of the day, right? And a signal bar is one that provides a possible entry for you in either direction, right? A clue as to where where we are going to be trending, right? And what this signal bar does here is has very similar properties to this red 5 minute candle, right? Where it tests higher than the previous bar, but closes lower, right? Other important notes about this bar is that we fail to test high of day. We don't even get up there. So it's not a double top, it's a lower high, right? We fail to test high of day. And then ultimately we open and close below the high of the previous candle, right? So this is, again, in and of itself, a bearish signal bar, right? That's what I'll call it here. It's a sell setup in and of itself. And what's nice about this is on a 5 minute time frame. A big thing that I use is called time frame confluence. If you look at a 2 minute chart, which I don't necessarily advise, especially if you're a newer trader, just because 2 minute frames can really provide just too much shit going on. But again, we're looking
Sometimes
at this in hindsight. Yeah, so much noise sometimes that it's just too much. But again, we're looking at this in hindsight, so it's okay, I think, for a review, right? On a 2 minute frame, this is a little bit clearer of a lower high, right? On a 5 minute frame is not as clear, but on a 2 minute frame, it's a bit clearer that we try and go and test the high of day, and we can't even get up there, right? So a 2 minute provides us with that confluence, and then you go and look at a 15 minute chart. And a 15 minute chart looks terrible, right? My short entry bar that I'm talking about is the 15 minute close of this terrible red bar, right? That fails to break high of day and closes lower, right?
The moment the second candle closes, you can go short.
Exactly, right? The moment this second 15 minute candle closes and confirms like that, you can go short. And that on a 5 minute basis would be I believe, what is it? Right here, right? So for me, what I would use for entry is because I trade off of mostly a 5-minute time frame. What I would have used for entry is we have our signal bar, right? Which is our signal bar is the bar that tests higher than the previous one, fails to test high of day, and then closes red, right? So if you're using that as your short, especially against that 15-minute high as well, right? Your stop is a break above high a day, right? Or a 5-minute close above high a day. If it swipes above there, give it some room so that in case they're just sweeping the highs, you don't get stopped out. But it's not that big of a risk otherwise. It's a couple dollars on a stop, right? So you're not taking a giant risk dollar wise in the options. And if it's a Friday, then let's pretend you would be using next week contracts, even though we know none of us would. Never. But the entry that I use, there's a signal bar and then a trigger is what I like to call it, right? And so a lot of times the trigger is the 15-minute candle close, like Tim was mentioning. For me in this case, I took a trigger of when you have a bear trend bar or any signal bar, the trigger can be that the break of the bar in the direction that you want to trade, right? So that sounds complicated, but it's simple, right? So if this is our signal bar, this red candle here, and we want to trigger to get short, it would just be as soon as we break below the low of this candle, right? Because that confirms for us that we have an opportunity to head lower. A good example of that would be if you had just taken entry on this 5-minute candle right here, the subsequent candle never really triggered you, right? It never broke lower. 4 never broke lower than 3, meaning that you wouldn't have taken that early entry down here and then had to hold through a little bit of pain, right? So that's what I use for a sell setup that sets up and confirm and triggers. Yeah. So bar 5 would have been my signal bar, right? And the trigger comes from is bar 6 here, and then from there it's just a matter of being patient and holding two targets, right? And so even again, if you had no hourly levels to go off of and no future price action to go off of, there's a few things that the market, I call them free gifts from the market. They're the tools that the market, everybody gets them. They're free. They're public knowledge. There's no algo or any bullshit like that. That's the overnight low or the pre-market low, which we have right there. And what I believe to be more important is the opening price, the first price the stock trades at that day. That generally always sees a reaction, right? And if we then were to come here and move forward with our price action from our short and look at what happened, right? We took out the open, and then what did we do? Bid you swiped pre-market lows, and then set up a 5-minute reversal, right? Before I get into the 5-minute reversal and anything like that, is there any questions on what I've just talked about so far? Because I know we just gave you guys a shit ton of info that is probably you haven't heard it this in depth of analysis on like candles shapes before, and so, or at least in a while. So if there's questions, I want to open it up to make sure of that, or if there's anything, Tim, you want to say before I go into the reversal pattern.
No, good enough for now.
Sweet.
I'm just about to join on my computer, by the way.
Perfect. I have a little bit more on bid you, and then after this one, then we'll pass over I'll make you the screen share and we'll go from there. What exactly is the definition of a signal bar? Okay, so we have a few questions here. What is the definition of a signal bar? So a signal bar is a candle that provides you with sort of confirmation of a trade that you're looking to, right? It's exactly what it sounds like. It gives you a signal, right? It's a candle in which that provides you as a trader a signal. So I understand that can be confusing with signals you take, but that's not what it means. It means signal just from the chart, right? So in this case, candle 5 here is the signal bar to get short, right? Because this is our lower high on resistance. We test higher, close lower. We can't break high a day. That's the signal bar that we're using. What's more important, the resistance you drew on the 1/4, on 8th hour or previous day close? I don't fully understand your question, but all of them, any resistance is only as important as the market proves it to be, right? So What do I mean by that? It means if you're not seeing a reaction at that level, it means that the market's telling you that it's not really important right now, right? If it's
Can you hear
and
me
so
right now?
yes, I can. Yeah.
Okay, cool.
Go
Yeah,
ahead.
it's exactly what JR is just saying. It's wherever there was a previous reaction. Um, for me, the levels that I look at are the weekly levels. I want to see where there is a reaction on the weekly chart where it got to and it just flat out reversed. Those are the levels that I'm marking out as the most important levels. And then JR, like you said, he's going to mark out your pre-market highs and lows and your opens. And the yesterday's close is also important too. Like those are your good intraday levels to trade against.
Right. 100%. I part of where I get my levels too specifically, I use an hourly chart to find them. That's just what I found the style that works for me. But really, like Tim said, it's all what matters most is whether or not it reacts there, right? And most of the time, we do see reactions at these price levels that we find. But what's interesting enough about the trade that I just described to you all on Bidu, I didn't really once mention 207.75, right? And I mentioned once or twice that we filled the gap and then we were at yesterday's close. But more or less, you theoretically could have taken that trade strictly based off the price action of the candles, right? Now, if you do that, you're going to be taking a billion trades a day because price action offers a lot of trades. So the reason we use levels is because levels give us context around the price action.
And it's a higher probability trade if it's at a big level.
Exactly. It gives you more pieces of the story, right? Let's see. What time frame would you advise is most efficient? I use 5 and 15 minute. For watching.
5 and 15. If a 5-minute candle is forming and this candle is absolutely pivotal, I'm going to go down to the 1 and the 2-minute chart and I'm going to see how that candle was formed. I'm going to find out if within this 5-minute candle, if the volume ramped into buying or it ramped into selling, or if like the last minute it caught buyers. It's going to tell more of a story. I don't like to watch the 1-minute chart specifically because it's very, very noisy. But if I'm watching a current candle, like if it's, if I signaled in chat that I have a stop condition of a 5-minute close under 177, and I'm watching this 5-minute candle, I'll go down to the 1-minute chart and I'm going to see if this current 5-minute candle is seeing more sellers than buyers. And maybe it might make me change my mind. I don't always set actual hard stops. And especially on options, I never actually set a physical hard stop loss because it's so easy to get spiked through and stopped out on options that sometimes it's better to just take the pain. And that's why we risk what our position size is our risk. We don't, whatever we bet on the trade is what we're willing to lose essentially on the trade. We never really lose that much almost ever. We're going to stop out at 30 to 50% loss, but assume you're going to lose the whole trade and you're going to be able to hold through that kind of price action.
Right. And that's something, especially like on this trade on a Friday, if we're going back to Bidu, if you're taking, especially a 0-day contract, you have to be prepared to lose the entire position, right? Because if we took this trade this short on Monday and we got reversed over the highs, stopped out on a $3 or $4 move on Bidu, $3 or $4 stop, we'd probably lose 25, 30% on a Monday or a Tuesday. But on a Friday, we're going to be down 40, 50, 60%, right? So you have to know
almost
that,
all of it. It could be that bad, right?
Right. So you have to know that going in, right? So one of the other questions that we had was, how would you trim this trade? So I took this trade on Friday, and honestly, it was such a large move that when I took my short, I closed it at the opening price. So because it was like a $10 move, $10 to $12 move on Friday.
So fast.
Yeah, so fast that I didn't even see how much I was up, honestly. I exited, right? And so, but immediately though, my thought became, okay, let me find a reentry, right? And Bidu actually gave a bunch of really good reentries. So let me run through this really quickly, and then I'll pass the screen sharing on to Tim, and we'll go through even more. So where I took my first reshort of the day was this candle right here. With Bidu, while this is a strong looking reversal that held pre-market lows, it was so far down. Again, this is where context matters from the previous day. And personally, I still thought we needed to trade those lower levels, that I was looking for the first short signal bar that I could find that would give me some sort of clue, right? And this 5 minute gave me that clue where we were pushing higher, and this candle closes below the previous candle's open and the previous candle's low,
With
showing
terrible
us some
volume.
weakness, right? Exactly, and low, extremely low volume on the bounce back, not what we would want to see, especially on that candle. So it's a risky entry though. Why? Because if we pull back to right here and hold, there's a decent case of that being a higher low, right? Which at this point, I definitely thought
It's
could
kind
be.
of a golden pocket long right there.
Right, exactly. And so when this candle came around, I thought, all right, I'm going to have to be nimble about this, right?
Yeah.
I'm going to have to be nimble and adaptable. But I decided to let it ride, even though we have what's called a buy setup here, right? We have what is a reversal. It's a reversal that doesn't actually reverse anything, right? When you want to find something that you're trying to long, when it failed to close the gap, when it traded lower, when it's beneath its opening price of the day, all of these different clues, a little higher low like this that looks like a reversal probably isn't enough to confirm, right? You want a little bit of extra to be, okay, we're holding over the open, or we're clearing a 5 minute lower high. So we're at least back in a 5 minute uptrend, right? Something like that. So I held, and I actually added on this candle right here.
Yeah.
I added right there, which was a lower high. And the way bid you moved on a Friday, it was a good enough move that I was all out by this double bottom, right? It was like a $5 or $6 move. But again, I even before this bear flag was forming, this is what the chart looked like, right? And while it looks nice, like a double bottom off pre-market lows, I'll tell you this: anytime something double bottoms off pre-market lows, it's spending way too much time near pre-market lows, right?
Right.
That's never a good sign when you're
You don't want to
consolidating.
knock on that door too many times.
Exactly. You don't want to be consolidating near pre-market lows, right?
Yeah.
And so to me, I'm not interested in buying that reversal, even though you could have for a scalp, right? And
Yep.
again, if we use the same price action principles that we talked about earlier,
That was a reversal right there.
that was a reversal, right? This was the same exact setup that we saw in the 5 minute earlier, just with a little more candles spread out between it. All the principles are exactly the same. We have a 5 minute bar that tests lower and ultimately closes. It doesn't close green, but it closes with
Over
a
the
long
trend.
tail, right? And counter the tension, right? So we have that. It's higher low, meaning similar to how this candle bar 5 couldn't break the bar 3 high. This candle couldn't break this bar's low.
It didn't even make
right?
it to low of
It didn't
day.
even make it down there. That's bullish, right? And so I actually think I might have taken a scalp long on this, but you don't expect the moon
A huge
when you're
move,
going
right?
for it, right? But what the trigger for that was this was our signal bar, right? A higher low off of low of day, but we don't want to just take that blindly. Again, same with up here. We wait for our trigger, right? The trigger would be breaking over the high of this candle,
Yep.
right? And so this is where, and I even had this ovaled out. I imagine because I was describing to someone one of the trades I took. So I think I did take this trade off of like a double bottom and a break over this former high, right? So for the rest of the day, the next clue that we get before we get down to this lower area is again the same type of
That
price
lower
action
high.
that we're seeing up there, right? A lower high,
And
a
that's where you
high.
probably drew your trend line at that point, as soon as that lower high was made.
Precisely. I did not have the trend line prior to that. And actually in admin chat, this was, if you look at the timestamp of this candle, it's probably exactly when Fong said, bid you looks dead catty.
Right.
And that's when I drew the trend line there and I said, oh shit, I'm going to look at shorting this moment.
Yep.
Right. And by this time, again, one of the principles of my trading is knock enough times, someone's going to answer the door. This is the third or fourth knock of pre-market lows. I had a level below that I wanted us to trade to, right? So I took the short up here as, right? So this was our trigger. Our trigger was this red candle, which is low high, which is kind of weird because it's just an inside bar, right? So it doesn't, in and of itself, isn't bearish. But again, relative to all the previous candles and the story overall that's being told to us is that, okay, potential lower high here. If we break this inside bar's low, we might have a move down. So this is where I got short.
And if
I
it's
think
going
I
to
had
continue bullish, you need to see more volume. Like
right.
bulls have to prove it with volume. Same thing with bears. You know, if you're not seeing any real volume increasing, the move has no real strength.
Right, 110%, 100%. And again, this, if you zoom out too, if you zoom out and give yourself context, the bounce, while it looks good zoomed in when you're really up close and personal, zoomed out, the bounce just looks like a tiny little bear flag, right? In the grand scheme of like death.
Right.
So that price action was the clue to get short again, and then um, the clue down here for reversal would be the volume climax, like Tim is talking about, right?
Yeah.
You start to see some selling volume increasing, the selling volume increasing, and then we have a bar that has a significantly larger volume than the previous ones. It also has a tail to it. If you had levels there, it's coming off a level, which I did have on 7760s. We reclaimed that on the next candle. We 175 round number was there. So there was a lot of clues. I mean, it was also down like $30 from the highs. So there's a lot of clues that you should be bailing on shorts. And the first potential place to look for a scalp long, which I wouldn't have advised doing because this was a very bearish move. But again, we look at all the same principles, right? If we have the principles of this candle being with everything we just talked about, the volume climax, right? The tails, the round number and all that. What we also noticed about these previous bear trend bars is they never broke over their previous bar's high, right? This bar never broke over this bar's high. This bar never broke over this bar's high. This bar never broke over this bar's high. This bar never broke. That happens for a reason, right? The minute that this bar broke over this bar's high, I guarantee you what happened is a shit ton of buy orders were sitting there.
Right.
And they said, okay, we're going to reverse this up, right? The next bar proceeded to be an inside bar, right? So again, similar to what we talked about earlier up here, an inside bar, right? We took it short as it broke down. Yep. Here we have an inside bar, or excuse me, here we have an inside bar, right? But it doesn't mean anything negative for us. It doesn't continue us down because the first trigger of it, the first actual actionable thing that we can do from it is a break over its high, right? I'm not saying that you buy that breakout every time. That would have been a good scalp, but you probably would have gotten stopped out.
This was a tricky one because
this was a tricky one.
This is a clear bear flag.
Yeah, exactly. And I actually, you know what? It was a different time. It was this bear flag when Fong said, "Bid you seems dead caddy," and this is the one that I actually, this is the one where I actually went short, like within a 5-minute period that Fong said that, and it was because of this candle right here, which
rising
is a
wedge.
candle.
Yep, bear flag. That's
rising wedge, bear flag, and this candle here tests higher, and even though it doesn't close red, it tests way higher, and it sweeps liquidity up there without actually going anywhere, right? So now if they decide to reverse that, you can participate in the long up there. But in the reality, what you should be looking for is, okay, was that a fake? Are we going to start breaking down off of these lows, right? And that's exactly what happens here. So I remember I took this short off of this low's break, and I got greedy because I thought we were going to break low day. And so when this red bar that looks like a hammer came and proved to be a higher low, I kind of talked myself into it being a little bit bearish and all that. But then we have a clear setup that looks like a reversal, right? A higher low with a tail wick candle, right? Higher low in relation to the previous low of day. Then we have an inside bar. Well, it looks nice. It's a big long green hammer. You zoom in on it, all it is an inside bar, right?
It's kind of tweezers almost.
Right, yeah. But it stays fully inside the previous bar.
Right. The open and the close.
The open and the close. So it's fully in there. So it doesn't actually trigger anything, right? But that long tail was the clue for me to bail on my shorts, and that's what I did. And
the long tail just signifies that there were buy orders waiting at that level.
Exactly. When there was sellers pushed into it,
there was supply there.
There was supply there, right? Or demand there, right? There's demand there that was still there to buy it all up. And plus, what's interesting is that one thing I want to point out: most times, more often than not, reversals, the reversals especially, have hammers and long tails on them, right?
Mhm.
This particular candle does not. This, while it does have a tail, this in and of itself, by if I can't just zoom on that. If you ignore the subsequent green bar, just this red bar here with the low of day, that in and of itself isn't a reversal candle, right? It's not a hammer. It's not a bullish engulfing. It's anything. So lows like that,
You're gonna see like 60% of the candle is a tail
right?
or more.
Right. In this case, these types of candles often invite either a higher low or a retest. And in this case, it didn't do that, right? It invited a higher low and a bear flag because what that was essentially, the way that I read that story is that the lows were swept here, but buyers aren't sure if they're happy with that, right? And or sellers aren't sure that they're happy with that. Buyers aren't sure if they're confident enough yet, right? Because it's not a very convicting candle, right? I would have wanted to see something with a super long tail that closes a hammer, or I think we're exposed to a higher low, which is exactly what we got here, right? So if you reshorted this bear flag and you were looking for strictly price action to tell you when to get out would have been the break of this hammer's high, right? Zoom in on it. The clue to get out would have been, the clues would have been, okay, this looks like we might have a higher low. You might want to be, we might be holding here. The subsequent candle is a green inside bar with a long tail. Dude, you really might want to get out there. Okay, we broke over this bar's high. Time to bail completely, right? And that's when you bail, strictly based off price action. And if you have if you think there's enough potential upside, that's where you could reverse and look to go long there, right? Now, again, these examples that I'm giving are you don't want to take every trade that you're given that is given price action wise, because you'll just end up taking a bazillion trades a day, and you'll be what will happen is called death by small knives.
Yeah, death
like
by 1,000 cuts.
death by 1,000 cuts. Yeah, where you'll take a bunch of small losses. That's not what I'm saying,
And you're
but
gonna get eaten by commissions as well if you're taking that many trades.
100%. Take that from someone who I spend like 60 to 80 bucks commission a day. It's really bad.
Yeah, I think I've spent $4,000 in commissions already this year.
So bad, dude.
Yeah.
But the point of this is that price action is always telling us something, right? I'm a firm believer that this all comes from a book that I posted in the chat. I believe that you guys everyone should read this book. And one of the things that this author says is that every single tick, every single candle is showing you something, right? Most traders decide it's too confusing and they don't want to, whatever, they'll wait for something to give them a different clue and all that. But that's not that confusing because it's everything that we've all learned, right? Like all of us learned when we first started trading that a red candle that tests higher and closes lower is bearish, right? Like we all learned that. But what's important about that is knowing, okay, that's our first clue, but it's the subsequent 2, 3, 4 candles that actually make that clue matter.
Right. I'm never making a decision on one candle. It's gonna be it's gonna be about 3 to 5 candles combined.
Exactly. It's going to be some sort of one candle can be the influence and the clue and or the signal bar, so to speak, but it's everything as a whole that tells you the complete story. And that really, that is the main thing I want to talk about, because bid you ended up didn't give us a sell setup that held for the rest of the day. All sell setups, which was this one and this one, were immediately reversed over their highs. But I saw this bid you chart at the end of the day Friday, and I spent my whole day sitting here scalping just one contract of it, having fun. And I went at the end of the day, I was like, oh man, I really want to have a webinar about this chart because so many different price action clues and hints here that just come with a $30 range on an individual day on a stock, right? Normally, this is the type of chart that we would see on a 4-hour chart, right? We would see this kind of range on literally a 4-hour chart. This would be the 4-hour candles. And this was all happening intraday.
Yeah, happening over days.
Yeah, like literally over like 6 months.
Happened in hours.
Yeah, this happened in hours. Yeah. So that's the main thing I wanted to share. I'm going to end my share here and pass the ball over, so to speak, to Tim so he can share his screen. But feel free to post questions. And yeah, but I really, that's the main thing that I wanted to cover was, okay, the main thing that's really what I wanted to cover is, it was just that chart provided some really good price action opportunities. So hopefully that was helpful to all. And if you have more questions about that, just let me know.
What's the name of the book, Jake?
Oh, it's called Reading Price Charts Bar by Bar. I posted a PDF of it in the stock chat before. So if you search my messages or just search bar by bar, you should be able to find it. That's the name of it. It's the greatest stonk book of all time for me, or at least for me. Yeah. All right, Timmy, take over, my man.
Yeah, man, you really covered a lot of it there. The only thing I would add is, basically how do we find our levels that we're going to trade against? So someone give me a stock and maybe something I haven't traded and we can find some levels on it. So throw me a stock in chat. Visa, I've traded that one. Square, traded that one. Traded that one, traded that one, traded that one. Cisco, I haven't traded that one in a while. Here we go. I'm not trading. Baba, guys, is on my blacklist. I just don't mess with that one. You have any luck trading Baba, Jake? Did we lose him already? All right. Well, all right. Well, here, Cisco is an amazing chart. This thing is so strong. And I actually haven't traded this one in a while, and I deleted all my drawings on it. So this is a good start. So the way that I'm going to approach a chart that I'm just new to is I'm going to pull up the weekly chart. So it's 1 week, which means each one of these candles represents a whole week of time. And what I'm going to go through is I'm going to mark on this chart, starting from the most recent price action and working my way back. And I'm going to see the levels that it did a full reversal at. So for example, this week, we were not going to do anything. I'm going to go back, and the most recent one was this one right here. I'm going to mark a line right there. We go back right here. Go back right here. Back right here. Go here. 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 Interesting, that level is already marked. Back here. 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 These two are pretty good. And that looks like enough information to me. This one, and this is a good enough one right here. This reverse right here, we can mark that one out. These look like really strong levels to me. So to me, looks like Cisco is immediately heading somewhere around 54.23. After I've done this, I'll draw fibs on it. And the way we draw fibs is if we're in a downtrend, we draw top to bottom. If we're in an uptrend, we draw bottom to top. And so far, this has been a downtrend that's been reversed. And so just, I can see right away from top to bottom, I can draw a fib right here. We can find out where we're at. And I turn off the levels here. So after drawing this fib, we can see that we've already closed over this golden pocket area. And the golden pocket on your Fibonacci is going to between, for us, we say it's between the 618 and the 707. Brett has the 786. He goes all the way down to the 786. I tend to disagree with that. I think the 707 is as far as I want to go for the golden pocket. If you read, I think in that book, in a lot of price action books are going to tell you that it's between the 618 and the 65. And I believe that was true for many, many years. But one of our admins, Fong, actually noticed that this 707 level, which I believe 707 is the square root of 50. And I think that's how he came up with that level. But we've noticed that the algos tend to react a lot at this 707 now. So we call this our golden pocket. And the golden pocket's a really great level on the short side to try and short against. So you can notice that it did actually work. You know, if we didn't see any of this price action coming into it, we're here on the weekly chart. And we saw that we made a bottom and we've made a reversal. We've now made a higher high on the weekly chart right here. It's obviously reversed. we could see our levels, and that we know that when it first approaches this golden pocket level, it's probably going to be a heavy resistance and we can short against it. And sure enough, once this did happen, we're going to come right to that level, and boom, it was a short. Boom. That would have given you a couple killer trades. You could have gone from here to here, and these are swings, obviously, because we're on a weekly time frame. But that 618 level got a reaction twice. The third time we come to that level is going to be pretty telling. You know, are we going to bust through it, or are we going to get rejected again? I think they say there's no such thing as a triple top. You know, if or a quad top. A triple top, you know, is a very bearish signal. So if you hit it a third time and you come down, it's really bad. If you come up a fourth time, that one's probably going through. Usually it doesn't test it 4 times because, like Jake said, the more time you knock on a door, the more likely you are to go through it. Let's see what kind of happened here. It was a hell of a short. And notice it came right to these levels that, you know, we've drawn out. Next time it comes to this golden pocket level, it made it to the 6.5. We went right through it. Super strong. And notice how every week we're getting more and more buying volume. Very, very strong looking. This thing looks like it wants to test its all-time high. If it breaks the all-time high, we can go all the way up to new highs. But is that the all-time high? Probably no, probably not.
I really hope that we break the all-time highs.
Recent highs. Yeah, I was gonna
recent
say I forgot about the .com bubble.
Yeah.
That was
Holding
good.
so much Cisco.
Yeah, you're ready for it, right?
Yeah.
But anyway, that's how I would find my levels. And now if we go down to the intraday chart, we can see that these weekly levels we drew have amazing reactions. Like, look how this weekly level we drew. We drew a long time ago. It's from, where was that from? Let's change the color of that one just so we can see. We drew that from back here. Let's make it pink. We'll make this one purple. We'll go down a 5-minute chart. That level from weeks ago, months ago, made a huge reaction on our intraday. So the fact that we have these levels already traded out, we see this reaction here that was bearish, but we come into it again, test it, and then close over. This is an entry right here, this candle right here. As soon as this one closes here, this retest and the pop over, you can take an auto long right here. And you might even swing this one because the next level isn't until 54. You know, you probably could have overnighted this one into Monday because it looks like it's going to continue. On Monday, what are we going to look for? We're going to see where it opens. I assume it's going to open somewhere up here. And what we're going to do is we're probably going to mark out this previous close, which is here. Oops. Right here. And on Monday, when it comes back inevitably to retest this level, that's our long entry right here. The buying volume says that this is a buy setup. You know, there's all kinds of buyers. If it gaps up, it's most likely to come and retest this gap. And so on Monday, if Cisco hits 52.58, we take a long entry. And where do we risk against is the question. Probably these pre-market lows right here. So if we take a long entry here, risking against these lows, that's a 5-to-1 setup. Exactly what I look for in a day trade. I don't know if you have anything to add to that, Jake.
No, also you might want to go back to the one chart on your screen. I'm seeing the 8 right now, just so we can zoom in on Cisco.
Oh, yeah.
No, though that's damn good. This thing looks great. I have an hourly level at 51.20s. So if we pulled back to there, which kind of looks like it was like the first pullback of the day on the intraday 5-minute chart. That area I could see working as well to add to a position if we were to start at 52, 57. No, Cisco looks good though. I think this chart looks good. Yeah, I mean,
Very
I'm
strong.
hoping this breakout continues. Yeah.
Yeah, it looks like it should. Yeah. I'm really liking this chart. And this is a pretty good dividend stock as well, isn't it? Yeah. About 3% yield.
Yeah. Oh yeah. I think that's the reason that it's been catching up so much is that the reason it's been catching up so much is that it's really, compared to other tech names, its valuation is really cheap. And then it also has a nice dividend. So even if the market pulls back, people are looking at it as like a safety type of stock.
Right. At least holding the stock, you're going to get something back for it.
Right.
Yep. Let's see. What tool is that? It's the risk reward tool on TradingView. It's just the long position. You can do a long and a short position. You could draw daily pivots. I like to use weekly pivots. I think the daily could be a little noisy sometimes, and you'll notice that, you know, it's actually the weekly pivots are daily pivots too. You know, they're just the most extreme levels. You know, but daily pivots are good too. I probably mark them in a different color, make yourself a little system. Like say, make your weekly pivots blue, your daily pivots purple. You know, because the weekly pivots are going to be the stronger levels. I've just noticed that, especially intraday, if you approach a weekly pivot, 99 out of 100 times you get a reaction out of it, no matter what. So it's always a profit taking level for me. Okay, so I feel the same way about indicators as JR does. Like the fact that I even had that many indicators on the screen, I'm a little embarrassed. Really, I only use VWAP and RSI, and I will consider, this is called relative volume. I will consider this in the morning as well. Dario and Dario and Dane developed a morning breakout strategy that they like to trade with, and it uses RVol a lot. It hasn't been working much lately, so I haven't been using it too often, but here's a day where it did work. Let's see, what day was that? That was the 22nd. So what you're looking for on this strategy is basically you just want to see the first 5-minute candle close over the pre-market high with very high relative volume. And this day, I don't know if it had or not. We have to turn off extended hours. So on the 22nd, yeah, this would have been a perfect day to set that up. So the first 5-minute candle on Cisco closed at highs. The relative volume compared to previous days was 14.5 times the normal volume. Yeah, who is doing that?
Sis, thank you.
To a corporate just to
Yeah, that's all good. It's all good. We got where you from?
Someone he got it from out of lake.
Can you try and mute them, JR?
Yeah, I'm seeing who it is. I don't.
It's Allison.
Yeah, no, real talk. Thank you. Yeah, I'll
Scroll up to the top. Alice, there we go. Okay. All right, there we go.
Anyway.
So I saw one question that I wanted to address, which was the EMA bounce strategy. Somebody said, do we not use the 9 or 21 day? Do you mind, Tim, on your screen, will you throw up bid use chart with any of those EMAs, a 9 or a 21 or 20? Whichever ones you have loaded already. A 20 would probably work fine if you have it. But I just want to show an example of why the EMA strategies can be deceptive, right? Because you ignore some of the other price action that is going on, right? Like bid you early on in the day, with no extended hours on it, doesn't reclaim it, it looks like. Yep. Which is a nice clue. But if you look at it with extended hours, it does, bid you is holding an EMA off that very first pullback, right? So that you should theoretically get a bounce there, right?
Right here, right.
Again, that it for me at least, it clouds the story that I'm trying to
It's
tell.
kind of a trap.
Right, because people might buy that EMA, and in Bidyu's case, I'm looking at the 5-minute 20 EMA with extended hours, or any EMA with extended hours on. It will look like we bounced there, and we did, but it was a candle.
I
that
would have
was
taken this
trapped.
short right here. The moment this candle closed right here, I would have
Right,
been, because
right,
look at
exactly.
this volume. Awful.
Yeah,
You know, if you're going to have any kind of follow through, you need buyers to show up, and they're not here.
exactly. And it doesn't break above the previous candle's high.
It didn't even get over it. Right.
It just stays there, right? And so it's a trap candle that looks like it bounces off of an EMA. And so I bet a bunch of traders took that long before the candle closed.
This
because
kind
they
of day, I
bought the
would not
EMA.
use EMAs. The
Right.
only day that I use EMAs on are like really super big trending days.
Right, 100%.
Visa, this is a day where we can use EMAs, was on Friday. It's just trending up all day long. And you could actually find some re-entries on these EMAs. Oops. Let's change this. Let's go 9 and 20. Allison's back.
Obvious. Allison, you stay muted.
Man, I don't even know. I don't know how to answer that, because I don't use EMAs at all. This is like the fact that we're holding this 20 all a day. That's a pretty good clue that we're going to keep going up. But I have the EMAs on my screen. I really don't use them. Price tells everything, price and volume. I do like VWAP. I do like to trade against that one. You know, when we retest VWAP on intraday, like especially early in the day, this candle right here would have been a stellar long entry, in my opinion. We held VWAP, you take the long, and you can scalp some points out of this. And how I find my my trims is probably with the fibs usually. So if I drew a fib from the intraday to the low of day, it's a 50% bounce. I probably would have trimmed it here, 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 and here. It would have been close enough. You know, that would have been a good gain. And then we would have probably stopped, you know, somewhere around the second trim, which would have been here, and we would have got stopped. But it still would have been a good trade. Yep, golden pockets between the 618 and the 707. Oh, here's a good question from Kyle Carter. When taking options trade, how do you know which strike price to use? It's a really, really good question.
That is a good question. And it's not a simple answer, honestly, because Tim, I know you'll agree with this, every trade is different. And every trade requires every trade has its own criteria for a strike price, right? If you're swinging something, you know, and you're following flow or something like that, then you may be a little bit more out of the money than you would typically be. But really, there's no easy answer for that. But a good rule of thumb is to try and be in an at the money delta contract, which is about 0.4 to 0.5, and that is typically an at the money contract. So if you can afford to be at the money, and that's a good general rule of thumb, right? Again, there's
the way I do it
specifics, but
is it's going to completely depend on the day of the week.
Okay.
And I'm always trading weekly contracts, and it's always on a very liquid name. I don't like trading any names that have, you know, less than thousands of open interest, and you know, the daily volume on those contracts is in the thousands as well. So any blue chip name is going to be great. You know, Apple's, Visa, you know, you name it. As long as there's a lot of volume, I'm happy with it. But on Monday and Tuesday, I'm fine with trading out of the money options. They can be very out of the money as well. As long as we are confident that we have caught the bottom, it really doesn't matter which contract you pick on a Monday or Tuesday, as long as you've caught the bottom. If you don't catch the bottom, you're going to get destroyed. So it's very important, that you have good levels and that you're confident in them. In general, if you want to be safer, you're going to pick an in the money contract no matter what. Even on Monday, if you can afford it, they're extra expensive on Monday because you still have all that time, baked into those contracts. But it's going to be the safer trade, because if it goes sideways on you, you're not having theta and volatility getting sucked out of that contract. It's just you're still gonna have intrinsic value left in it. So the way these options are priced is there's two types of value. You have intrinsic value and extrinsic value. Intrinsic value just simply means the difference between the strike price and the underlying. So if I'm looking at Visa here and I pick a 210 contract and the price is at 213.42, I have $3.42 of intrinsic value. That means the contract is at a bare minimum worth that much. Any extra value on top of that is going to be your theta and vega. That's going to be your extrinsic value. So your time premium and your volatility premium. And the volatility premium is what the market makers are deciding that option is worth based on the Black-Scholes algorithm, which is going to just guess how far an option is going to move up or down in a given amount of time. So where was I going with that? Yeah, so in the money options, hold on, my thinkorswim wasn't loading. Let me load that back up. I'm going to stop my screen share for a second so I can put my password in here. And reload this up. Nobody can see my screen, right, Jake?
Nope, you're good.
We're good. Get this loaded back up here. So we can look at an option chain. Okay. Let's pull this bad boy in and let's look at some Visa options. Next week's a shortened trading week. If everybody didn't know, Good Friday is going to be closed on April 2nd, which means options are expiring on Thursday this week. So coming into tomorrow morning, we have to assume it's Tuesday already based on these options. So I'm not going to be picking super far out of the money contracts. I'll be a little bit closer to the money this time. When it gets to Wednesday, I like the at the money contracts. Right here, I'm showing our delta, gamma, theta, vega. And this is our time premium. And vega is basically the market maker's implied move premium. And this can move up and down throughout the day. And sometimes I use the options price as an indicator as what the stock's going to do. Because if I'm already in a call, say I'm in an at the money call, and you'll notice this sometimes, the stock price is going down, but your call is mysteriously gaining value. And it's the damnedest thing when you see it. You're like, okay, the stock price is moving down, but my call is increasing in value. What's going on? It's a pretty good indicator that you should be adding to that trade soon, especially if you compare it with the chart and you're seeing reversal candles, in that pattern, like JR was talking about earlier, just clues that it's going to start reversing. If you have an option that's already open and the value is increasing on that option as the price moves down, and then you see a reversal candle, that's where you double your position, or you go to maybe a little bit bigger size, because that's going to show you that the market makers are increasing the volatility on that contract. So they're expecting a bigger move coming, and you can start adding to that position. And it happens all the time. It'll start rocketing from there. When that happens, though, you do want to be scaling out of those options very quickly, because after that moves happens, that volatility can start contracting very quickly. So as soon as those moves happen, you want to start trimming those contracts off right away. And when you get, you start approaching these pivot levels, I don't think I have Visa super marked out yet. Let's just go back to Baidu. I have that one marked out here. My beloved Square. Square. I traded this one. I didn't get a chance to signal it, but on this level retest, we'd scaled out, and by the time it got here, I only had a couple contracts left, and then the rest of them got stopped around here. But it's a phenomenal trade. You should never have your full position on when you're approaching resistance. You always want to be trimming along the way. And that's one of the hardest lessons that people have to learn when trading is how to trim along the way. You just won't survive if you're not trimming. There is a scalping saddle, and we have an admin named Not Your Father's Broker who's actually very good at entering it in massive size lots of SPY contracts and just taking the whole thing and jumping in and out. And that is a strategy. If you have a large account and you're able to do that kind of thing, you can make an absolute killing doing that. But a more conservative way of doing it is to just scale in. Your first position, you're going to put in about 1 to 2% of your account. If you add to it, you can add another 1 to 2%. You add again, you can add 1 to 2%, but you don't want to be risking a ton of your account. Like, I don't like to be, as a rule of thumb, you shouldn't be in more than 5% of your account per trade. That way, if it goes against you, you're not risking too much of your account at a time, and you're giving yourself more bullets throughout the day as well. Let's see. I don't know what else to really add to that. You got any
No,
more
I mean,
questions?
yeah, we've covered a shit ton. So I mean, it's up to you if you have anything else that you're thinking about. But I feel like we've covered a whole bunch of good stuff. And any questions you guys have, let us know for sure.
Jacob's iPhone. Walk us through the Boeing and Square trades on Fridays. Here, let me pull that up. How about Gavin and these friggin' cheap contracts? Every time I take one of his signals, I'm wishing I bought 100 of them.
I know, right? Like,
I followed this with 5 contracts. In the last contract, I held a 1,700% gain.
ABBV, Jesus.
Yeah, it was what a phenomenal trade.
Yeah.
Absolutely crazy. Anyway.
Up to 90% of those with moderate to severe
Old JR. Yeah, we had a really killer day on Friday.
Look at Allison.
Oh, wait. So we opened.
Yeah, dude. Friday was great. Yeah. So it was BA and Square were the main two, right?
Yep. Boeing has just been my baby lately. Everybody knows that.
Boeing has had really nice. The price action has been clean lately. I've really liked
Super
it.
clean, and it's respecting the hell out of the weekly pivots.
Yeah.
We've been, you guys have noticed I've been trading Boeing a ton lately, and it's just because it has these big intraday moves, and it's moving right between the weekly pivots that I marked out. So the first trade that we took would have been right here. It was at 834. It's on a Friday, a 245 call. I believe I saw it coming into this pivot, and I just started scaling in right away. So I think I got in on this touch right here. And it was a 245 call. So I was pretty damn sure there was going to be a super strong reaction off this level. So I took an at the money call, and this is pretty unusual for me on a Friday. Actually, usually on a Friday, I like to be 3 to 4 strikes in the money already. That way, if it does go sideways or down, you're not going to get killed nearly as bad as an out of the money or at the money contract. So just for example, on this one, if we would have took those 245s and our stop was right here, we still probably would have lost 50 to 60% on those contracts. It would have been a crazy loss. But, it did work the way I thought it would. We got in right here. Yeah, that's exactly what I did. So it's probably this candle close rate. Yeah, so I think it was actually, it must have bounced off that level. 34, we got in, and then I would have added. Yep. We probably added on this touch right here. And then the trim levels were probably marked on a fib. And I say probably because it's not an exact science. You know, sometimes the contracts are going to just move a ton and they'll be up 50%. And it's just, you got to trim because they're up. But I probably would have trimmed here, would have closed most of it here, and would have been damn near out of all of it here. Once the way I like to take my contracts is I like to take tickers that I can take 5 contracts on my first entry. So if I can afford to buy at least 5 contracts from my account size on the very first entry, that's ideal because I like to have 3 trims and 2 runners. So if we started here and say I only got 5 contracts, I would have trimmed 1, 2, 3 times and then had 2 runners. One would have got chopped off here and the other one would have got stopped out about right here. I always try to stop my runners and profits. I don't want to give too much back. And the reason we hold on to our runners is sometimes we see a stellar move and it just keeps going. And you can make a lot more money if you're good at holding your runners. At what fib do you know the trade is going against you and you should bail? Let's see. I wouldn't say at what fib, it's more at what level. If it's not holding a weekly level, that's when you should bail. Like say we took a long right here. And we probably would have trimmed it once. This candle closed right here, we would have bailed. The fact that it closed below the previous pivot low, we would have bailed right here. So it's more about where we're stopping relative to our entry, not really on a fib level.
And one thing I'll add is that it doesn't matter. Well, it does matter, but it doesn't really matter where you stop. Everybody has their different methods of what they use as a stop, how loose they are. The only thing that matters in the end is you need to have it planned in advance. It needs to be before you enter the trade, which anytime Tim signals anything, we know exactly where our stop's going to be, right? But if you guys are taking any trades on your own, you need to have your stop planned before you even think about entering, right? You need, that needs to be part of your default plan.
With the on the same token, you have to know where you're getting out in profits as well.
Agreed.
If you're taking a trade just because something is running and it starts running, how do you know when the hell to take profits? Hold on, we'll be right back.
So I'll see if I can answer some of these other.
All right, I'm back.
Oh, there you are.
All right.
We're talking about taking profit, having your plan to take profit.
Everybody's gonna notice this when they're looking at a chart and Apple's going nuts. You know, it's flipping out, or Facebook's an even better example because that one flips out more often. Big green bars, you take a long and it keeps going and you're winning and you're up 200%. Where do you get out? Do you even know? That's not a trade you want to take. You need to know where you're going to get out on both sides, whether it goes for you or against you. Because if you don't have a plan, you're going to hold that thing and then you're going to find out that you held a contract overnight that you were up 400% on, and the next day it's freaking worthless the moment you wake up. Happens all the time. Do fibs accurately tell if an uptrend is going to happen? Fibs are just part of the clue. Fibs are more, you're going to draw them when you've seen a complete move happen. So I like higher time frame fibs a lot. So here's a Boeing fib, for example. And I'm always going to draw them from the most recent extreme pivots, high and low. So from here is a low to a high. With the Boeing price action so far, it's bounced off the 50% retracement, but I wouldn't be surprised at all to see it come back to 223 one more time to test this golden pocket. So the price action I'm looking for on Boeing is basically I'm looking for it to set a lower high somewhere. And I'm guessing it's going to be somewhere around here. I'm thinking Monday we could see a nice gap up and then a fade. And Boeing could sell off, but when it hits this 223 again, I'm probably going to buy it with both hands. And that's just an expression for, we're gonna bet a little more than we usually bet on this trade.
Which level are you looking at?
I'm looking at 223.
Oh man, that would be a dream if we got back there.
Oh, I would love to buy it again there.
23. Yeah. Yeah,
And
I have a trend change at 223.35.
And it would make sense for it to make a lower high and then a lower low and then reverse there. And then you see something like this happening.
Yep, that daily is not daily right now. It's not bad, but it leads me to believe
It doesn't look strong, right?
Yeah.
That Friday close was not impressive.
No, but the good news is it closed above no, excuse me. Yeah, that's bad news. I thought for a second my brain was like the market sold off Friday, right? It's like no, the market closed.
No, it
off
absolutely
Friday.
ballooned. And
So anything that didn't close high a day was real bad. And
right.
This should have closed high a day.
So I'm not exactly looking for long entries on Boeing right now. I might be looking to fade, a gap up. I'm looking for this thing to make a lower high. So I wouldn't be surprised to see Boeing get rejected by, 254, where I've got this fib here at 258. Could get rejected right there again. It wouldn't be surprising. That'd be a nice level for it to get rejected against. So we could try and scalp a short entry. And our targets are going to be these weekly pivots, which you'll notice on the daily, it's had amazing reactions at. Mason Hall, do you guys draw support and demand zones or mostly use support resistance? It's the same thing, man.
Yeah. Potato.
Yep.
Tomato.
It's just a different way of calling support resistance. That's supply and demand. It's supply, what if you're below it, and it's demand if you're above it.
Yeah.
Support resistance, same thing. What are some cheaper option contract companies to trade weekly at the monies? So it's going to be your stocks that are trading about under $100 that, don't move wildly. Usually AMD is a really good one for smaller accounts.
AMD is my go-to. Yeah. Starbucks is one that's pretty cheap because it doesn't have huge IV, even though it's like
Nike.
Nike's a good one. Yeah.
Really good one. Squares used to be amazing, but now,
now it's in the expensive.
Thankfully, the account has scaled enough that we can trade it. So
Square is the reason the account scaled.
Yeah, exactly. It's actually my number one stock for profits this year, followed by Boeing.
But by far is Square.
Yeah. Let's see, AMD, Square. The banks are really good. BAC, Citi, Morgan Stanley, JPM. Those are good contracts to trade. Yeah, American Airlines, CCL, Norwegian Cruise Lines. I'm not crazy anymore about space, but it's pretty good. Same thing. JR talked about how he always looks for strength and weakness pre-market. I look for the same thing very much. And at the open, I want to see how it reacts to the pre-market levels at the open as well. So if we get volume on the first 5-minute candle, a ton of volume, and it's closing over pre-market highs, it's a pretty good clue for continuation. And sometimes we'll take that trade. You've seen us get burned by those as well. You know, sometimes you get absolutely faked out. And that's actually why you don't see me doing those trades a lot lately, because we have been getting faked out really bad. Few weeks, or I think it's over a month ago now, we had a Fubo trade, I think on a Thursday, where I took the pre-market, the first candle close over pre-market had great volume, but the next candle literally dumped the entire candle in under a minute, and we lost 80% of the value on those contracts in under a minute. It was absolutely brutal. I actually had a very, very terrible day because I was feeling pretty cocky, and I foolishly sized up into that, and I got very, very burned. So I'm really not taking those trades as much anymore. I see you guys have more of a big volume trader into big candles, and now you are trading more reversals. Yeah, I think the reversal trades are much better probability. Absolutely.
Yeah, reversals just provide clearer entries most of the time. More
Yeah,
fake outs for sure, but they also, it's just clearer.
I see more
Usually you
fake
can
outs
tell the story a little bit.
on the pre-market volume candles. You know, sometimes you will see, you know, huge buying volume, and all of a sudden it just gets dumped, like just a total trap. So if it's not at a weekly level, you know, maybe that's a clue that you shouldn't be sizing into this trade. You know, you should take it a little easier.
Dude, there's a quote that I read from that as rereading some of that book yesterday. And one of the things that it says is this, I literally quoted it. It goes, if the reversal, he goes, oh yeah. So this guy is talking about reversals, right? And how people want to, why do things reverse off the open, right? Like they sell off for the first 15 minutes of the day or something. So this guy says, if reversal is back up strong enough, very few traders will be willing to short because they're warranting a strong move to the upside. Would there be anything that you could do if you were an institutional trader to make this happen? Yes, you could buy in close to the end of pre-market and push up the price and fill up some of your orders, as not much volume is needed to push or move stocks up. Then
Right.
once the market opens, liquidate some or all of those longs and even do some shortings. Since you want to buy lower, you will not start buying until the price falls in an area where you might consider value. So it's true. They literally, I'll post this quote in the stock chat, is that's literally what they do, is what they'll buy it all up pre-market and then dump it at the open and go short and then
I do was the
rebuy it.
perfect example of that.
Yeah.
Uh,
So I think they did it a little bit reverse in Baidu too. I think they shorted pre-market, then they bought the open, right? And then
Right.
reshorted and reshorted.
right. Like here. Bought that open and really got some people excited. I bet you got a lot of people trapped right here.
100%. Oh my God. Yeah. People were just not paying attention to anything. And all they wanted to see, they were just believing what they saw of the first candle of the day, you know?
And it's funny thing to think, but like if you're in here and you're listening to this webinar and you've done any research at all about trading, you are much better than the average retail trader.
Yeah.
You know, the average retail trader just buys blindly. They have no idea what they're doing. So yeah, Baidu tomorrow, Monday, what are we going to look for? Probably a break of Friday's highs and then a retest of Friday's highs. See if this can continue. And let's see. Penn got beat up. But I do think it could reverse. I do strictly stocks, Mason. Pedro, you can draw fibs on literally any time frame. You can draw it on the 1 minute chart. Works all the time. Here's a fib right here. Golden pocket bounce. Target achieved. So if we didn't see anything on this chart, we got to right here. This is a 1 minute chart. I don't know why this is not letting me scale it. Oh, I keep forgetting that. We see this reversal. We could have drawn a fib right here. We're looking for an entry at the golden pocket and a target to the 272. Our stop loss would be a 5 minute close under the golden pocket. So right here, it's a 13-to-1 setup. Let's see if we got in right there, and the stop was directly under there, 8.3-to-1 setup. Let's see what happened. Never got stopped. Awesome trade. Off topic, best platform for crypto. I don't even know. I don't recommend Kraken though.
I honestly don't trade enough crypto.
Yeah, I don't really trade. I don't trade crypto. I buy and hold it too. I've heard FTX now is excellent for trading. The issue I have is most of the US approved platforms don't have all the cool pairs that are doing all the crazy movement. Like Binance US doesn't have access to a lot of the trading pairs that are doing all the crazy movements that we're seeing the signals on. And I also like to sleep at night, so I don't trade a lot of crypto.
Yeah.
Ruby. Rubis Therapeutics. That's an absolutely parabolic move. What kind of news does it have? Insider buying. Healthcare. So this is just a crazy parabolic move. And obviously it's consolidating a lot. So I'm going to bounce between time frames and see if I can actually see a pattern on the hourly here. Maybe we can draw something. This looks like a descending triangle on the hourly. So you could look for some consolidation in here. When it gets to the end of this, usually this is a bullish. Descending triangles are usually bullish. So usually you're going to see something like this happen. You're going to see a breakout and then a retest. And this is your entry right there. You want to wait for the actual breakout, a close over to confirm that it's a breakout. And then you can get in the moment it touches this trend line again. And your stop would be probably wherever the recent pivot low was. But this one right now, this is in no man's land. You know, I wouldn't take a trade on this one. I don't know what it's going to do. JR, I don't know what did you have any opinions?
No, I got, I think it's just a sit and wait, right?
Yep.
There's nothing, you don't want to short a move like that until you get some sort of confirmation, but I also don't feel great about longing.
This could be a short if you actually broke below here and then got the retest.
Right.
Down. But usually, you know, when you see a descending triangle like this and a flat bottom, it's usually pretty bullish.
Right. Agreed. Yeah. I would definitely be looking long, but I would probably just want the breakout just because I'd be worried about that lower high on the daily.
I think this has probably another week to consolidate.
Yeah. Agreed.
And then the tighter the consolidation gets, we call that loading the spring, right? That's where you're most likely to see a more explosive move to the upside, and especially the longer it takes to do that. Let's see. Goodyear tire. Old Villa. Oh man, so bullish.
Yeah, that looks great.
Wow. Yeah. Now I remember why we signaled it. So I believe Anthony and I got in, I think right here. We took kind of a beating. We should have doubled down on this close right here. But I think we'll wait. We're going to wait. We will add to this trade. I just want to see it break first. Once we get out of this bull flag and get the retest, we'll add to that trade. And this one looks phenomenal. So we'll go to our weekly chart. Oops. Let's draw our pivots. Drawings. Change that back to my Purdy blue. Pivot. Pivot. Here, here, here. That's enough. So yeah, where are we looking for Goodyear to tire to go? These pivots. When it breaks over this 1938 level, we'll probably add again. I wonder why my thinker or my trading view won't let me scroll this down. It's stuck. So weird. Yeah, we'll be looking for something like this to happen. Continue up. Next one, EVFM. Oof. Yikes. Let's see. Small cap. It's probably a low float too, meaning there's very few shares. Yeah, 80 million shares, very tiny float, very easily manipulated stock. This is probably not something I would play. I'm guessing the options are terrible, or it has no options. Oh, shoot, that's not bad. When I'm looking for swing options, I'm looking for high open interest. Mostly. So we can see January 2022, these 7.5s have pretty good open interest. So somebody might believe in the stock. I'm not always super sure. My day trades are way better than my swings. And lately my swings have been completely missing. You guys have noticed I haven't been signaling a lot of swings lately. JR, when you look at open interest, that's a pretty good indication of contracts sold at that level too, right? I don't know if you know you're muted. Okay, so, let's see who asked that. Gordon Tang. Descending and ascending triangles are actually neutral triangles. They could break either direction. I've just personally noticed that the descending tend to be bullish more often than not. Cheers, Daniel man. Raw, yeah, I still like ABML. I'm gonna add a lot to that pretty soon. Yeah, this one's still great. Oops. Technically still in the golden pocket. Yeah, I think tomorrow on Monday we could add to ABML. And I'm happy with adding this all the way down to every dip. I think this is a great company, has a good future. LGG, Super League Gaming. These stocks have been hot. If you like that stock, look at this one too. Allied Esports. This one's been running really well too. SLGG super strong. That whole sector is strong. I can see that this looks like it just made a golden pocket bounce right here. If we draw from this pivot to this pivot, it's sure enough right out of the golden pocket. I would say, I don't know what's wrong with my trading view. I can't scroll this down. The 272 is a good target. I think this one's heading for like 13 bucks. This one's not super strong yet. But it could be a bit of a falling wedge. Yeah, I'm not seeing that. I think on crowd, I would like to see it make some bullish divergence first. So I want to see the daily chart make a lower low, deeper into this golden pocket, hopefully around the 707 level. We do have this huge gap to fill down here. And a gap is simply on the daily chart, just when the opening price of one day is vastly different than the closing price of the previous day. So on this day, we closed here, but opened up here, which left this giant gap. So all this happened in pre-market. And on most stocks, gaps tend to get filled. So when a gap is left, like this one right here, when it gapped up, it was bound to come back and retest this gap at some point. It took a while, but it did happen on this day right here. And you'll notice that on this day right here, it actually reversed right at that gap, but it didn't have any strength to follow through. So crowd to me looks like it's heading for this gap right here. So 144.69 would be an ideal entry. It would be a 786 solid entry. I don't usually take those entries, but if it has confluence with a level like this, like a gap fill, I would buy crowd with both hands at 145. Oh my God, this Disney chart never resets for me. It constantly saves, and every drawing that I've ever put on it stays. I have to delete it every time I come to it. It's so bugged. Disney is tricky price action. Just like any other stock, it tends to fill its gaps. It made a huge move from those lows. So I wouldn't be surprised to see this thing continue to cool off for a while. And it has a bunch of gaps to fill. I'm not super bullish on Disney right now. I would like to see it come back. I don't think it's going to come all the way back to 128, but I wouldn't be surprised at all to see it come back to 155. If you take a retrace from this low to high, This is a 382. It would make a lot of sense if it bounced here. This is a golden pocket. It would make a lot of sense if it bounced here. I think we'd have to see some real doom and gloom in the market for Disney to get back here. Could happen, who knows? But Disney, I'm not super sure of until it starts breaking this high with some conviction. Then you can start looking for longs. But until then, I'm kind of hands off on this one, you know, until I see this gap fill. I would take a stab right here. My stop loss would be this pivot like right here. So if we took a long here, I would stop if we were breaking below this level. And that would give us an amazing risk reward because we could take it back. We could try to trade it to the previous high. And with the stop that tight, we're getting almost 12 to 1. Maybe. This looks really good. Really good. Kind of a rounded bottom here.
Rebound, rebound.
Oh my God.
What are they doing? Oh, that guy can't foul.
JR, help.
That was a lot.
We all thought they were done, and that 3 went in.
All right. Well, I'm just gonna wrap it up here, guys. JR's gone. I don't have any way to mute you guys.
You would think they have so much more money.
I'm not the host. I can't mute them.
Wonder what it was. They had a free to open it up.
So we're gonna wrap it up there, guys. We'll do this again, maybe next week. But thanks for all the questions. I think this was Jacob, real quick. I think I just covered what I meant when I said gaps to fill. It's just when you're seeing gaps on the chart, when there's a lot of pre-market action, usually the market's gonna fill these gaps. So Airbnb right here, you can see there's a weekly gap. It did already fill. Airbnb looks good in the short term. You know, I wouldn't be mad at taking longs on this one. But anyway, we will wrap this up here, and I will see you guys in chat.
Ready?
Oh, Airbnb. Right. Oh, that's a way different chart. All right. Oh, well. We'll see you guys later. You guys have a good one.